You must absolutely know these things before setting up a limited company. Find out my top 5 things you need to know before setting up a limited company in today's video. Hi guys, welcome back to my YouTube channel. This week we're talking all about my top 5 things you need to know before setting up a limited company. It's so easy just to go ahead, set a limited company up, but what a lot of people don't know is that there are things that you need to do, accounts you need to file and so much more, and getting these wrong will be very, very costly. So make sure you're listening up for this video. Number 1, as a limited company, you need to do a lot of admin. So you need to file a corporation tax return to HMRC, you need to file a full set of accounts to Companies House, and you also need to file a confirmation statement. These are the 3 things you need to do at the very least. Failure to do so and you will get very significant fines, up to £750 I think it is, for late filing of accounts, many hundreds of pounds for late filing of corporation tax returns, and all of these add up. So if you're not on top of it and you don't know when your deadlines are, it can very easily cost you a lot of money. So that's number 1. Number 2 is taxation. So a lot of people think that when they're running a limited company, the limited company's money is their money. That's not technically true. Separate legal entities, a limited company pays its own corporation tax, and as a result, if you want to pull it out as a shareholder or a director, there's likely going to be additional taxes to pay, whether that's income tax, if you take it out as salary, dividend, interest, or if it's a repayment of director's loan. There's so many different things to consider, but broadly you need to remember that the limited company money, although you own the limited company, it is separate from you and you can't just take from it as and when you choose, because there will be unnecessary tax implications which could be avoided if you spoke to your accountant and got some solid advice. Number 3 is remember that finance costs are slightly more expensive when going for a limited company. I've covered this previously in other videos where we've gone for limited companies, against limited companies, to help you give an idea of what way you should be going down. But if you are looking to go ahead and set up a limited company, make sure you remember this amongst other things, because it is easy to overlook. People do the wrong budgets. They think they're going to be getting buy-to-lets mortgages at 2%, where realistically it might be 4% depending on their circumstances. So definitely speak with a mortgage broker and make sure you know what interest rate you're paying, because that makes or breaks a deal. 4 is remember that accountancy fees are a lot more in a limited company. So doing it in your own name, you could do, a lot of people do their own self-assessment tax returns, but we wouldn't recommend it because the tax system is incredibly complicated, and most of the time when people have done it themselves, they come to us, we look at their previous returns and we identify hundreds of pounds of tax savings that have gone missed, expenses they've not claimed, reliefs they've not claimed. So I don't recommend you doing it, but you can. Whereas for a limited company, it is very, very difficult to do yourself. We wouldn't recommend it to anybody, simply because you should never know your accruals basis, your financial reporting standards, your accounts have to be prepared and be generally compliant. So there's a lot of different things that you need to be aware of when it comes to a limited company. That's completely different to trading in your own name. So that's definitely another thing to bear in mind. And the last one really is all about when it comes to selling a property. So when you sell a buy-to-let property in a limited company, you don't get those proceeds. If you've got a £200,000 gain, that doesn't go to you personally. You can't actually access it until you've gone through the motions of drawing it from the company. So you're taking it as dividend, director's loan repayment, you're taking it as salary. All of the different things need to be considered, and you're likely going to get taxed twice, because you'll pay, if you sell a property, £200,000 gain, you'll pay 19% corporation tax on that. And then when you want to pull that out personally to enjoy, you're going to get hit again from a tax point of view, depending on exactly how you take it out. So my top 5 things that you need to watch out for before setting up a limited company. If you found this video useful, please do give it a thumbs up, as it really does help me. So please do that, and also make sure you subscribe so you get notified as soon as we post more videos. Cheers for watching, guys.